Inflation is back with a vengeance, and it's hitting Americans right in their wallets. But here's where it gets controversial. While consumer prices surged in August, jobless claims are soaring too, leaving economists divided on what this means for the economy. Is this the start of a dangerous stagflationary spiral, or just a temporary blip? Let's dive in. Imagine a bustling holiday season in New York City, with shoppers like the woman in the photo, carrying bags filled with gifts and essentials. Now picture those same bags getting heavier, not with more items, but with higher price tags. That's the reality for many Americans as the Consumer Price Index (CPI) jumped 0.4% in August, the biggest increase in 7 months. Housing and food costs led the charge, with shelter costs rising 0.4% and food prices climbing 0.5%. Even your morning coffee and dinner steak are feeling the pinch, thanks to tariffs and supply chain disruptions. And this is the part most people miss. While inflation is heating up, the labor market is sending mixed signals. Weekly jobless claims spiked to 263,000, the highest since October 2021, raising concerns about a weakening job market. This dual threat of rising prices and unemployment has some experts whispering the dreaded stagflation word, a toxic mix of stagnant growth and inflation that haunted the 1970s. So, what's driving this? President Trump's tariffs are a big culprit. Businesses have finally run out of pre-tariff inventory, passing those higher costs on to consumers. Labor shortages in farms, exacerbated by immigration crackdowns, are also pushing food prices higher. Economists warn that more tariff-related inflation is on the way, though it may take months to fully materialize. Despite the inflationary pressure, the Federal Reserve is expected to cut interest rates next week. Why? The surge in jobless claims and a weakening labor market have policymakers prioritizing economic stability over inflation concerns. But here's the kicker. If inflation continues to rise while job growth stalls, the Fed's job gets a lot harder. Here's a thought-provoking question for you. Is the Fed making the right call by cutting rates now, or are they underestimating the risk of stagflation? Let us know in the comments. Core inflation, which excludes volatile food and energy prices, rose 0.3% in August, driven by higher housing costs and airline fares. Used car prices also ticked up, adding to the broad-based inflationary pressure. Meanwhile, the dollar weakened and Treasury yields fell, reflecting investor uncertainty. The bottom line? Inflation is back, and it's not coming alone. With jobless claims near a 4-year high and consumer confidence waning, the economy is at a crossroads. Will this be a temporary bump or the start of a longer, more painful trend? Only time will tell. But one thing's for sure, Americans are feeling the heat.